Until 1913, the United States did not have a central bank. Yes, there were repeated attempts to create such a bank, and in the 19th century, it was created twice, but each time the opposition turned out to be stronger and this institution was disbanded. And it is believed that it was the crisis of 1907 and the direct role of John P. Morgan in overcoming this crisis that prepared the ground for the subsequent creation of the Federal Reserve System. And let's tell the story of this crisis. It all started with the fact that the brothers Otto and August Heinze decided to corner the shares of the United Copper Company. What is the essence of this strategy? Cornering the market is a trading strategy based on buying a large number of shares of the company, with the aim of further manipulating the price. Usually this happens as follows. A large player begins to buy up shares, and this in turn leads to an increase in share prices. When this player accumulates a sufficient number of shares, he can force all players holding short positions, bears, to return the shares they sold earlier, and they, in turn, will be forced to buy them in the market, where a larger number of shares are concentrated in the hands of one player, and therefore, it is this player who will set the prices for them. Although at first glance this strategy looks very simple, in fact it is quite a complex and high-risk strategy that requires certain knowledge of the market, skills, a large amount of money to buy shares, but even all this did not guarantee success for the player who decided to play such a game. In the history of stock trading, there have been many cases when players wanted to beat the market, but instead suffered huge losses. And this is exactly what happened to the Heinze brothers. Why did the brothers take this step? August Heinze worked in the mining business for quite a long time, and in 1902, he decided to create the United Copper Company, uniting several smaller copper mining companies. After the merger, his company became one of the largest copper producers in the country, for which he was nicknamed the Copper King. And here it is necessary to emphasize the following. August may not have been a poor man, but he did not have enough funds to create such a powerful company. Therefore, external financing was usually attracted for such transactions, and the sale of shares on the stock exchange in the USA has always been one of the most popular ways to attract financing. The company issued shares, then sold them on the stock exchange, and after receiving funds from the sale of shares, it could spend them on financing various projects. And although Heinze was one of the key shareholders, but since a significant number of shares were sold on the stock exchange, technically other players could also accumulate a large number of these shares. It is believed that this scheme was not invented by August, but by his brother Otto. Whether he himself found out somewhere or someone had tricked him is unknown. All that is known is that he decided that at the moment there were a lot of short positions open on the company's shares, and considering his brother to be the largest shareholder, he offered him a scheme to punish bear traders and at the same time earn some money on it. Since they had no experience in such trading, they involved trader Charles Morse in their plan, who had previously pulled a similar trick on the frozen water market. Yes, there was once such an exchange product in the USA. Since for a certain time he became a monopolist in this market, for this he was nicknamed the Ice King. Therefore, the candidate was ideal. There was only the last piece of the puzzle that was necessary to implement such a daring plan. Considering that millions of dollars were involved, it was necessary to find a bank that could provide financing for the purchase of these shares on the exchange. The Knickerbocker Trust Company agreed to this, and on October 16, 1906, they began an aggressive buying up of the company's shares. In just one day, the price rose from $39 to $52 per share. The next day, the brothers began demanding that short-term investors return their shares to them, and the price rose even more to $60. But on the same day, it turned out that there were other shareholders on the market who were ready to sell them cheaper than Heinze. It is not known for certain how this happened. Perhaps one of the large shareholders did not want to sell the shares to the brothers, and the brothers could not come to an agreement with him. Or perhaps someone simply decided to punish them. In any case, by the end of the day, the price had fallen to $30, and the next day the price fell even lower to $10. For the brothers, this meant a complete fiasco and the inability to fulfill their obligations. Together with the brothers, their brokerage company also went bankrupt, and later problems began at the Knickerbocker Trust Company Bank. they began to experience disruptions in the financing of current transactions. Since the bank's depositors could not receive their funds on time, this provoked a banking panic. As a result of this banking panic, the bank suspended payments. Meanwhile, the panic had already spread to other banks, and frightened depositors wanted to withdraw their money as quickly as possible. The situation was becoming critical not only for the banking system, but also on the stock exchange. Since brokers used unsecured bank loans to finance their operations, banks stopped financing these operations due to a massive outflow of funds. A grandiose collapse began there. There were many sellers in the market and no buyers, and completely healthy brokerage firms were on the verge of bankruptcy. If they went bankrupt, it would be the collapse of the entire U.S. financial system. Understanding the criticality of the situation, banker John P. Morgan decided to take matters into his own hands. With his great authority and influence, he managed to convince other bankers and famous businessmen, such as Rockefeller, to allocate money to save the banking system. As aggressive bear traders, in particular Jesse Livermore, later admitted, Morgan even asked to stop his aggressive selling, and this gave results. Over time, the panic subsided, and Morgan began to be called the savior of the financial system. This story is interesting because by his act, Morgan demonstrated the function of the central bank as a lender of last resort. Since at that time there was no central bank in the USA, and everyone understood that Morgan would not live forever, discussions began again in the USA about the creation of a central bank, and it was created in 1913.